All right, hello there traders, welcome. It's good to be back to Cyprus, and I'm happy to have arrived here safely in Cyprus, and it was great to have met students and traders in Nigeria, in Lagos, and would like to thank you all for your attendance and to meet up with me as well when I was there. So welcome to today's midweek webinar. So it's a midweek review webinar by Bretton. My name is Kenny Simon, and basically what we do have is a weekly webinar, and it happens on Mondays, Wednesdays, and Fridays. So I've got a lot to talk about today, especially with regards to the wonderful dashboard that we have. I've also mentioned to you guys to register on the Bretton.academy, and once you have actually registered, then we would be able to send you notifications and various other updates on what we are doing, as well as market analysis and various others. But before anything else, what's very important before we conduct our research and analysis is a dashboard that has all the tools, everything that you need: economic calendar, heat maps, top movers that we've talked about, various tools to analyze and research the market are all available on one platform. Now, this is called the Academy platform. Basically, it's a platform that's been driven or powered by Bretton and accredited by ATI, so you can always read about it and various tools that we actually have. But I would like to analyze the market from today onwards based on this dashboard, Academy's educational dashboard. So you don't actually need to go on to different websites and go into different areas, because everything that I have used for the past 10 over years in my trading, in my analysis, and also researching the market are all available here at one place. So we have got, as you can see, we've got a very nice user-friendly dashboard that has got tools. You can register on the webinars here. You've got the ebooks, courses as well. Now I want to talk to you guys about courses as well. There's a lot of questions about special topics, topics like Fibonacci, topics like using the MT4, MT5 platform of 10.trade as well, and basically to be able to understand various topics on its own, or also a collection of hot topics, as well as analytical type topics, as well as topics that you would actually be needing to use the tool. So we have got videos going to be ready to you, available on this dashboard as well, short videos to explain how do you actually use every part two, three. All right. Sorry guys, I think we've got a bit of a technical glitch there, but I think I'm back now. You guys can hear me. So let me repeat on what I've talked about, this 10 Academy, a wonderful 10 Academies dashboard. So this dashboard is where you would actually start your day with, and I will take you through on how to actually go through the PRICE trade plan based on this dashboard, because all the tools, webinars, ebooks, courses, news, various other things that you could actually use it as your tool in learning to earn are all based in one place on your 10 Academies platform. So this is where I'm really excited to actually launch this 10 Academies dashboard as well, and I'll be using this for my analysis, and so could you as well. So you can always just register on the 10 Academy. You can go in and register for it. You can click onto the register button right there, and basically I'm already logged in into my Academy. So once you have actually logged in into your 10 Academies dashboard, as we call it, then you would have you would be able to see all the tools, all the courses, ebooks, webinars, as I've mentioned, all the elements that you would need to analyze and research the market on a daily basis. All right. So what I would do is to bring you guys about in analyzing the market as a whole. Always we start off with sentiments, if you guys can remember as well, in my sessions or in my seminar and workshop, I've mentioned about how we take it through a step-by-step approach before we just jump into the charts. We don't jump into the chart or do any technicality side of things until we are sure of the sentiments of the market, the trend, and then we are picking the right pair for the day to trade. So of course we will be troubleshooting your trades as well on Wednesdays. On Wednesdays, it's usually a midweek review of your current trades. How have you actually been doing? Any questions, confusion, and various other things. So we want to get back onto track on Wednesday before we start trading again on Thursday and Friday, end of the week. So we are at midweek at the moment, and there's probably many questions as well on your current trades or the current conditions of the market. So just to give you a little bit of an idea of how we will be doing our webinars, live webinars from now on, is I'll be taking you through on the news section of the 10 Academy, so we can actually then analyze the market based on news, hot topics as well. So we are able to gauge the sentiments of the market, whether it's a risk off, are they turning off the risk? Majority of traders and investors, are they feeling, are their risk appetite on the rise or their risk appetite is falling, and then they are being more careful. So that could then be a gauge of understanding what markets are having a flow in on the bullish side as well as the bearish side. So here we have got the news section. We've also got the economic calendar section. Now the news section are on its own here, as you can see, but then once you want to go on to the heat maps and various other tools, you just click onto the tool. So what we would be focusing on is the news section right here, as well as the webinar section for those who wants to look into the schedule or schedule your week onto all the webinars that will actually take place. So with the webinars that are live will take place on Mondays, Wednesdays and Fridays, so you can actually click onto the webinars here to click and register for these webinars. Or you don't need registrations, actually, you just click on it and it's also being live streamed on YouTube. So here we have got news, as I've mentioned, all the short courses, medium, long and medium to long courses as well are all going to be under courses. So the video tutorials, as I've mentioned, we've got questions about how do you actually go onto the 10 Academies platform or the dashboard, how do you navigate and tour around it. So I'll be having videos to take you through in each one, on each one section of the dashboard, 10 Academies dashboard as well. So that's one part of the on-demand or in-demand types topic. We've also got topics on technical analysis, topics on fundamental analysis, topic on a trader psychology, the mind, the three pillars as well, the mind, the method, and the money. The money basically is a pillar that is categorized under risk, money and risk management. So we've got lots of formula to share with you. So these are all going to be organized in very short videos for your self-learning convenience. Okay, so there you go. So we've got courses right here. Now the ones to focus on are the tools as well as the news. Now news, the news section is powered by Forex Mirror. So as you can see, we have got Forex Mirror streaming all these news and amalgamated all the channels and various sources to actually bring you a one place to actually look at hot news that moves the market with high volatility and liquidity. So there you go. We have got this area here, and we've also got the economic calendar under the tools section. But don't worry, you guys will be explained on each section how to use them. But on a daily basis during the webinar live, I'll be taking you through the price trade plan using all the elements and tools within the 10 Academies dashboard. Okay, so it's no longer going on to different sites. Everything could actually be done in one place on 10 Academies dashboard. Okay, there we go. So we'll start off with a little bit of hot news that's been coming out, and most of the traders been wondering about euro, US crosses as well, major market. But what's most important is the risk element within the market, whether it's a risk off, or they're turning off the switch of their risk appetite, or they're turning it up to buy more and more. So at this moment of time, it's more or less a risk off situation, because gold is dropping. We still couldn't control the inflationary mode or mood of the dollar as well, and what's going on in the US. They're just having a big struggle on the inflation at this moment of time. As you can actually see, S&P 500, Dow Jones as well, Wall Street risk as retail traders still buy the dip. So they're still buying the dip, so we've got the greed factor coming in as well, once they are, keep buying the dip, as well as the inflationary mode or inflationary mood that is going on. So that is, pulling down the interest in the safe havens like the JPY, the CHF, as well as gold. So gold's downward fall has got a lot to do with what's going on in the States, what's going on in the market in general, being triggered by inflationary mode or mood, and this basically is driving a little bit of fear, and more progressively, fear and uncertainty, all mixed up feelings in wondering whether or not we are in a recession, or are we about to go into a recession. So this is what's going on at this moment of time in the market. Now, other hot news or what do you call that, these headlines right here that could actually be of impact on different currencies, different markets as well, would actually read with euro here. Now, euro punches lower as US dollar drive markets on no intervention by the Feds, or the Federal Reserve are not intervening or unable to do anything with this current inflation that is going on. So US dollar on the rise, and we have got progressive fall or drop of the of euro at this moment of time. So that's the general market sentiment that is basically going on. And now we go on to the news section of 10 Academy right here, just to get more of latest hot topics. As we can see, we have got the headline reading that the CAD versus the world midterm scenarios for the currency. Now we have got a lot of interest in the Canadian dollar with the current commodities movement with oil and various other things, other instruments, and a lot of traders are feeling a little bit more clear. I would say that they're feeling a little bit more confident trading CAD crosses as well compared to the other crosses, and this is mainly has got to do with what's going on in the market with commodities rise, and various other commodities are rippling. There's a rippling effect with one commodity, one precious metal affecting the other as well. So we've got a commodities and precious metal market is having a lot of volume going into it at this moment in the futures market, in the CFDs as well, and also physical trading on commodities as well as precious metals. So we need to actually be sure on the trend, of course. Now we have got dollar up on risk, as you have seen it earlier. We have got Australia retail sales, so we have got some focus on CAD crosses, US dollar, as well as Australian crosses. Now I want to also share with you guys on top movers from Action Forex as well. Now we would like to combine this tool with all the rest of the tools. 95% of the tools that you need, 95, maybe a little bit more, are all available on the 10 Academies Dashboard. So you don't really need to actually go onto different sites anymore. I'll share with you excerpts and then confirm that with the tools on the 10 Academies Dashboard itself, because we've got our heat maps there. We've also got heat maps on Action Forex, but the heat map on the 10 Academies platform would actually confirm all the other tools as well, and it looks like it's much clearer, and its statistics and its feeds are more accurate as well. So I would rather use that, but just as a confirmation with the top movers from Action Forex would actually confirm what's going on with the heat map as well. So they're all, going to be us connecting the dots, and we're going to use it as a like a system. Okay, so that would actually then be giving us a better, clearer picture of the sentiments and the trend of the market. Now, at this moment of time, as you can see, on the top 10 movers itself, we have got AUD monopolizing most of the top 10 currency pairs. So we've also got JPY on the first two. And what's important though is to look at the 4 dots. Now that was about perhaps about 15 to 20 minutes ago that I've done that. Now it refreshes every 15 minutes, so you can always go onto it and then check it out yourself. But then what's most important is us doing the analysis together on these different days using the 10 Academies Dashboard. So it promotes clarity and focus for most traders as well. So here we could see that the 4 dots revolves around an AUD cross, which is AUD versus the USD. There's a lot of selling going on at this moment of time, especially under the change percentage symbol right there. You could see that it's mostly negative. So negative on AUD, that means positive on JPY. So with respect to most of the currency pairs that are paired up with the yen at this moment of time, it does give us a little bit of a hint that there's a risk-off element to it as well that's been building up. Now, it didn't really build up from the early hours of the opening sessions in Asia or Australia, but now as London open, it's showing us that that JPY is gaining more interest. So what does that mean? That actually means that it could actually turn from a risk-off and from a risk-on environment to a risk-off environment. So it's been running on a risk-on environment yesterday, late yesterday, beginning of Monday, right up to today. But then as of today, London Open itself, it's showing a lot more interest into JPY. So JPY is a safe haven. So we've got a lot of flow coming into JPY where we would see that there's a lot of buying going on with JPY. So we will check on the charts itself to do a trend analysis once we have actually picked the right pair to trade as well. So this is a good hint for you guys to, for traders, girls and boys, to understand that we are probably just moving on to a risk-off environment, and then there are more flow of interest by traders and investors into safe havens like the JPY, especially the JPY, CHF as well. But we could see that the JPY and CHF crosses are getting more interest in buying the safe haven, because we see that it's a sell on NZD CHF, for example, but it's a buy on CHF. So it's sell on NZD, as you can see, a negative symbol right here, and basically that is what's promoting the whole interest in a safe havens as well as a risk-off environment. So risk-off environment, we could potentially see a bit of a rise in gold as well if they are giving some interest in safe havens in general, and there's a lot of turmoil going on for some reason that could actually then promote some buying opportunities or reversal of gold as well. Okay, so let's take a look now. Now we've moved on from the news section right there, and now we could actually tie in with the economic calendar. Now it's also very important to take a look at what's going on, especially medium and high impact data releases, speeches as well, and this is one of the elements of fundamental analysis. So you're conducting a fundamental analysis at this moment of time. As you can see, I'm not going onto the chart as yet. I'm just trying to gauge all the hints of the market of whether or not it's a risk-off or a risk-on environment. So it will help me understand the market better in terms of its trends, whether the trends are clear, trends are strong, and only then we are actually able to pick the right pair for today to trade or to do a trend analysis before we go further into the technical analysis. So now the economic calendar itself here, it's based on my time here, I think, if I'm not mistaken. Now here it's actually giving me an idea that here it's actually adjusted its time on its own to your location. So here in 1 hour's time, we're expecting the CPI right here as well for one of the countries in the Eurozone. And then we've also got pending home index, which is quite important for us to gauge the economy in the US. So we've got various high impact news for today, but majority of them would actually impact the US dollar, okay, or US crosses. We've got the EIA weekly right here. If you click on it as well, we have got the numbers, the data would actually relate to the number of barrels as well. So we've got a forecast of an increase, a reduction, sorry, in the barrels. So this could then promote more rise in the price of oil. So we want to take a look at that as well. So there's a couple of news here to take a look at. Now what we do next is to go onto the heat map that's available. Now the heat map is available in the tools section of the 10 Academies dashboard. So once you're on the dashboard itself, just click onto the tools. You've got various tools in there. So you've got the economic calendar, the heat map, various other tools are all in the tools section. So once you have clicked it, then you would actually go onto a table right here. Now, I'll be releasing a video tutorial very soon on high demand. Of course, there's a very high demand by traders out there to know how to use the heat map on 10 Academies dashboard. Now, this dashboard would give you more tools, as we would be adding more tools in there to help you understand the market, analyze the market in a better and clearer manner. So here we have got the heat map, and usually what happens with heat maps is that you would need to start with the currency on the left side, because we've got currencies sometime being stacked up at the top or in the bottom. But what we do is we always want to pay attention to the currencies on the left first. So for example, we want to look at USD, for example, USD crosses or Euro crosses. We don't start it from the top, we start it from the sides, from the left. So if we were to look at Euro, for example, as you can see, you've got all these boxes right here in green and red. Now, very simple. The green is for bullish market. Now, red is giving you the hint that it's bearish. But what's most important are the highlighted ones. Now, the highlighted ones, like this one here, is brighter, right? And that's under the CNY. So we're not trading Euro versus the Chinese renminbi or the Chinese currency. So we wouldn't pay attention onto these ones here. Now, the reason why it's highlighted is mainly because it's got more volume into it, and it's heated up more on that particular, that means it's strongly trending. It's strongly trending on that particular direction. That's what it means when it's highlighted, when it's bright, like all these ones here. So if we go on to Euro, there's no highlighted one, mainly because the trend is not clear, it's not strong. So we just leave Euro crosses out at this stage. But when we go on to USD crosses, we could see that we've got a highlighted one here. We've got one that's quite high, 0.79% right here, and the highest one is, of course, on CNY. Now we've got all highest, very, very high numbers of strength of the other currencies versus the Chinese renminbi. What that means is Chinese renminbi and the Chinese economy is experiencing a terrible struggle to the downside. So remember, we have actually talked about it when we talk about bearishness or bullishness of the Chinese economy. We need to always look into Australian dollar and New Zealand dollar as well, and the Australian economy as a whole, mainly because they are the best strongest trading partners that are available in the global economy. So they rely on each other a lot. So usually what happens is there's a positive correlation between the Chinese economy and the Australian and New Zealand economy. So at this moment of time, we see a downfall on in the Chinese economy. I think I've heard of more lockdowns and various other things that is just tumbling there at this moment of time in China, and lots of restrictions, more policy changes as well. It's just giving in a lot of fear within the from the public to the country, and at the moment the country is experiencing a very big struggle economically as well and politically. So there's a lot of geopolitical scenarios that is bringing the economy down at this moment of time. So that would then relate to Australian dollar, and hence the reason we're going to be looking at the heat map as well for Australian dollar, whether or not we have got more selling opportunities on Australian dollar crosses as well as New Zealand dollar crosses. So at this moment of time, the heat map gives you a bird's eye view on the trend overall, but you want to pay attention to currencies on the left. You start off with currencies on the left, and then you look at the highlighted boxes, whether they are the green highlighted ones or the red highlighted ones. So these ones are all not highlighted here, but when we look at USD, the highlighted ones are versus the AUD, versus NZD, and also the CNY. Versus the renminbi right there. So here, for example, we could see that USD, we start off from the left, USD versus AUD is 0.6 plus percent, 0.6% stronger than AUD. So USD is bullish against the AUD. So that also means that, and it's also picking up, as you can see, 0.6, now it's 0.62%. And you could see that this one here is picking up against the NZD as well. So both AUD and NZD really very weak against the dollar. So this could then help you to pick out. I mean, once we've analyzed the news, understood the risk off and risk on appetite of the market, we are able to just pick out pairs as well to analyze further in terms of a trend analysis. Okay, so this is why it's so important to have a one place, a one stop station to conduct all your research and analysis using tools, using various other learning elements that could actually be all in one place. And hence the reason it's really important for you to start your day onto your 10 Academies dashboard. So 10 Academies dashboard serves you as not only a tool but your learning hub as well. You've got your courses there, you've got your certificates, you've got various things, and it's exactly what we need as a trader, is to have this one-stop dashboard and base all your analysis and research in one place. Okay, so there you go. Now, in terms of JPY, we could see that, as we've mentioned earlier on, it's on the rise in terms of interest by traders and investors, treating it as a safe haven, because it is a safe haven. So we could see that the rise is quite drastic on JPY. That means traders, investors are getting into buying the JPY. So we've got all these strongly bullish pairs, bullish currencies going on right here, and that could then be paired up with very bearish or trend that is going to go towards more and more bearishness, like the GBP, for example, because it's red. Now we've got that number building up, it's highlighted as well. So anything more than 0.5% and above would be highlighted, and if it drops, you know, it'll get less highlighted. But then the highlighted ones, especially more than 0.7% or 1% and above, are the ones to pay attention with, and then you can actually then combine the right pairs to do a trend analysis for. So I'm just going to read out a couple of pairs, like USD crosses that we should be looking at would actually be the GBP USD, AUD USD, as well as NZD USD. Now these are pairs that you can actually write down for us to take a look at its trend from a technical perspective. So we need to do a trend analysis in order for us to get confirmation or ascertain that these are pairs that we can actually trade for today. Right. And for JPY crosses, it would probably be best to combine AUD JPY, AUD with JPY, NZD JPY as well. Now, if I go over to GBP, we're not looking at it being highlighted at this moment of time, but we could see that the bearish stand takes place. It's all red boxes right here. So GBP across it horizontally, you could see that it's mostly red boxes, but they're not highlighted yet. Once they are highlighted, that means that the strength of the trend is picking up and is quite steady. Hence the reason most of the other pairs, other currencies have got these highlighted boxes sort of being quite permanent there. It's not flashing, or it's not being faded away in terms of its color. So GBP versus JPY and GBP versus CHF is just picking up right now. Now we are on a live market. You could see that it's increasing from 0.5. Earlier on it was only 0.4% versus the JPY, but now it's 0.65 negative. You've got a negative symbol right here. That basically means that GBP is falling. GBP's trend is actually falling. It's towards a bearish stand at this moment of time. Now you could see all the others are picking up as well because of the London Open, because of the timing as well. Now it's picking up volatility and volume as well. So GBP versus JPY, GBP versus CHF. Now this is really interesting, mainly because GBP is picking up its bearishness from safe havens like JPY and GBP. So JPY is on the rise, CHF on the rise, so there's something going on in the market that could trigger fear and trigger uncertainty together with fear, and basically more of a negative stand of the sentiments of the market. And this is basically what's going on as we see the heat map, and hence the reason it's a better heat map than any other heat maps at this moment of time on 10 Academies Dashboard. Mainly it's it gives you the whole story, and it's more clarity to look at something that is actually moving and updated minute by minute or every couple of seconds, as well, as you can actually see. So we could see some are flashing and being highlighted and then not highlighted, but we've got some that has been staying on as green or red quite permanently for the past 10 to 25 minutes, maybe last 30 minutes as well. So these ones are to look at, especially USD versus the AUD and the NZD. That's been there for a while. GBP now, it's picking up on GBP, JPY, very volatile pair as well, but we want to take a look at GBP, JPY for any selling opportunities. Now the next one with CHF, which is also a safe haven, we are looking at its highest sort of movement or highest volatility as well to the upside for CHF is versus the AUD as well as the NZD. So we could see that CHF AUD, CHF NZD on the upside for CHF, but on the downside for AUD and NZD. And these pairs are quite good to look at for CHF crosses, which are the GBP CHF, AUD CHF, and NZD CHF. So, and when we move on AUD, we'll get the same idea: AUD USD, AUD JPY, AUD CHF as well. And then we have got lots of trading opportunities today. They're just building up its momentum. But what's most important is not to rush to trade immediately, but to conduct a trend analysis first. So if we go on to USD crosses, it's probably best for us to look at GBP USD, AUD USD, and NZD USD. So this is how we would be picking the pair, do a trend analysis, and then to make that decision of whether or not to trade this pair. So let us just start with some technicalities. And I'm on the platform of 10 Trade platform at this moment of time as well, and we want to look at some crosses, and we can start off with some crosses, USD crosses, especially your GBP USD, your AUD USD, and your NZD USD. So we'll start off with these three pairs and look at whether or not we have got any trading opportunities, but most importantly, what is the strength and clarity of its trend. So we'll do a trend analysis for now. I'm just clearing off all the tools that has been put onto the chart, and now it's a clear chart except for the three lines. Now most of you can actually remember I always apply the exponential moving average, is known as the EMAs. Now there are three EMAs I have applied for the past 10 over years, and I use the only only these three. So they are the 50, 100 and 200 EMAs. Now we will have short videos as well to tell you about these EMAs, how do you apply them. Go on to the tools section, insert indicators, and you look for your trend indicators, and then you go on to moving average, and then you will be inserting the numbers 200 as in the period there. You start off with a 50, 100 and 200. You can choose any colors you want, but we'll have videos to explain to you step by step on how you apply all these three lines as well and how you use it. The main reason for using the three lines is just to indicate the trend. No crossing over, crossing under, entering the market, exiting the market. No, I'm only using it, or we are only using it for the purpose of identifying and understanding whether or not it's a clear and strong trend for whichever instruments that you are looking at or thinking of analyzing it from a trends perspective. Okay, so we could always start off with the 1 hour chart, 4 hour chart and the daily chart, but what I like doing as well is to just cover on most of the time frame. So you can start off with the 30 minutes right up to the monthly chart as well. So let's start off with the 30 minutes on the GBP USD, for example. Now we're doing a trend analysis, so there's no issue of choosing which time frame. What's important is to cover a reasonable number of time frames that are consecutively moving, so we get a story of the market in terms of its trend. So here, for example, what we want to look at are the cluster of candles. Are they under all the three lines or above all the three lines? If they are actually trending or trading in between the three lines, touching the three lines, and the three lines are also touching one another, entangled, then we have got a very unclear trend. So here, for example, we want to look at the way the three lines are moving, whether it's a smooth river flow without touching each other like this, going downwards, or are they actually going upwards. Now if they're going upwards, the candles needs to be above as well. That would confirm an uptrend, and vice versa for the downtrend. Now on the 30 minutes for GBP USD, we could see that we've got the candles and the current price just slightly under the three lines. The three lines are moving to the downside, but not very strongly to the downside. The reason I say that is visually we don't see, we're not looking at the three lines that are moving like a river flow and having a very sloped movement. It has to be a little bit steep. The slope has to be a little bit steeper, and the more it goes onto an angle that is almost to the downside totally, we call it a 6 o'clock angle. So you've got a 5 o'clock, 4 o'clock angle, 5 o'clock angle, and then 6 o'clock angle. Now, if it's between 5 to 6 o'clock type angle, then we have got a strongish downtrend. At this moment of time, maybe it's just beginning to pick up, and also we are looking at the 30-minute chart. So what we need to do next is to go one step up, one time frame up, and to look at whether or not it could give us a bit of a story. So here, when we go on to the 1 hour chart, we could see that the three lines behaved a little bit more assertive to the downside, right? You see the slope, the steepness of it is actually a little bit better in terms of its angle as well. So then we can say that, you know, from 30 minutes to 1 hour, it looks like it's picking up in terms of its downtrend. We could see that the candles, cluster of candles and price is slightly under as well the three lines, which is a good sign to hint us of a downward type movement or the bias to the downside. Now we compare that to the 4 hour chart. Now in the 4 hour chart, we get that steeper and nicer, clearer lines as well, and we get all the cluster of candles further downward. So we could say that the trend for GBP USD has been picking up from 30-minute chart. It's picking up to the downside. It's behaving more and more bearish as we get into different time frames. Now, once we go on to the daily chart as well, we could see that this still maintains itself. So we've got a match from 30 minutes. It matches with the 1 hour. 1 hour matches with the 4 hour in terms of the trend and in terms of how the three lines are moving, and the cluster of candles are all under all three lines. And then on the daily chart, we could see that this is still happening, and we've got the GBP versus the USD trending and trading at 1.0678 area. Now I will draw two lines, one above and one under, based on psychological numbers. So I've got the videos will be soon ready for you, hopefully by tomorrow, on how do you use psychological numbers. I've created the video myself with giving you clarity on what are psychological numbers, how do you use them, what instruments, and how do you actually use it or apply it in your trading as exit and entry strategies of price action. Okay, so we are turning the price action strategy into entries and exits as well, now using psychological numbers. So we will have videos on that as well, so I want to show you that. Now, it's always good for us to do a trend analysis and then to also do a bit of a risk analysis onto our trend analysis. Mainly what that means is to highlight areas of reversal based on price action. Now that price could actually reverse based on not only support resistance levels or zones, but also on the psychological numbers levels. Okay, so we've got 0, 0, 20, 50 and 80. They are all the last two digits of a 4 decimal place. All that will be explained to you in our video tutorials on 10 Academies Dashboard. It will be posted in there for members, and hence the reason you need to register on 10 Academies Dashboard, so you'll have access to it. Terms and conditions do apply though, so you would need to read that and understand, but it's a great tool for you to start your analysis from. Okay, so we have got prices, as I've mentioned, at 1.0684, 85. Now let's also go on the weekly chart and take a look at the overall trend again. Now it lasts until the weekly as well, where we see that the bias is still on the downside. So this is a good good indicator. I mean, we started off with a heat map. The heat map indicated that. News indicated as well that GBP is biased to the downside. Various factors, they're struggling with various factors as well. So economically and politically, it is giving the fall of GBP to have more reasons of its fall as well, and its bearishness. So if we start off, let's say you can go onto the 4-hour chart as well, or the daily chart, and you zoom out. And what we want to do is we want to also look to the left a little bit. You could do it on the daily or the weekly chart, it doesn't matter. It's just so that we have a better view of an overall market, even the monthly chart as well. So if I go onto the 4-hour chart and go there, what I would like to take a look at is whether or not we have got any threat of a rise in the past. If there's a rise in the past, when you scroll to the left, and from the price at this moment of time, if it were to be very close to a rise of price, drastic rise, especially a bullish mother candle, then we need to be careful and wary about the current price experiencing a reversal very soon. So at this moment of time, it does not look like we have got any reversal coming through, but one of the ways I ascertain whether or not we are nearing or close to a reversal is by using the stochastic. Now I'll create a video on that as well, so you'll have a video on how do you actually detect a reversal, especially in a strongish trend like the GBP USD. Even on the weekly, it's looking like it's going to be falling, but most traders would actually ask the question of where would the support be. If we've got no referral point to the left, it's also very important for us to use the psychological numbers to be our guide in exiting the trade as well. So hence the reason exiting the trade is really very, very important. So let's do one thing first before we do anything else, or looking to the left, is to highlight two psychological numbers, one above the current price and one under the current price. So the closest psychological numbers to the current price, one above and one under. So it's trading at 1.0673, so clearly 1.0680 would be the closest psychological number to the current price on the upside. So I'll just highlight the price right here. So it's 1.0680. 0680. That's your first psychological number there. So because it's just too close to the price right now, I'll take the next psychological number at 1.0700. So 1.0700 instead. So that would give you a little bit clarity of where the current price is. If I've used that price of 1.0680, it would be too close to the current price and it might actually overlap and cover the current price. So we always want the current price to be in between two psychological numbers, so then we are able to gauge where we are in terms of location of the current price, or location of us as a trader, or where are we, how risky are we towards psychological number, are we waiting for a breakout of which psychological numbers as well. So if it were to be to the downside, then that because the current price is 0680, we would actually look at further down would actually be 1.0650 instead. So we have got, let me just change the here, so 1.050650 would be your psychological number at the bottom. So now as we zoom in, we zoom in, this is your daily chart. I'll go on to the 4-hour chart. It gets a little bit clearer. So we have got two psychological numbers, one above the current price and one below. So this is where we want the breakout to be, under this psychological level. Now we've got a referral point of a mother candle, a bearish mother candle as well, because the trend for GBP USD is overall to the downside. So we'll be focusing on the direction to the downside. If we're focusing on the direction to the downside, that means we would prefer for entering the market only after it breaks under the 1.0650 psychological level. So your entry, ideal entry for a sell, would only be later at 1.0640. So you can always do a pending order, selling your GBP USD at 1.0640. Okay, so you would sell there at 1.0640. Now we would use these candles, mother candles on the left, whether it's bullish and bearish, as your potential support and take profits as well. So here, for example, I'll mark the take profit with your green line, and so it will be clearer for all of us. Now I'll put a potential selling opportunity for GBP USD would be at 1.0640. Okay, so if I were to do that here, then we have got it right there in green. That would then tell you that this is where you could sell at 1.0640, but where could you potentially exit does also depend on the opening price of a bullish mother candle, okay, and also the closing price of a bearish mother candle. So let me highlight the potential take profit area in blue. In purple, for example, would probably be better. So I'll just put it as purple, or even yellow right here would be clearer. And the price, okay, let's take that, and we'll change this color to purple, or even blue, to highlight the reversal as a support level. So here I'm highlighting a potential support at the opening price of this mother candle right here, and this is at 1.0534. So 1.0534 is ideal because it's above the 20 psychological number anyway. So this is actually not too bad a place to take your profit at 1.0535, for example. For those who are a bit more conservative, you can actually use the level at 1.0560 instead. So we've got it right here, 0560. Okay, that is above 10 pips above the 50 psychological level. So what I'm doing is giving you two options of your TP. Your TP could either be at 1.0560 or 1.0535. It's entirely up to yourself. Okay, So it does depend on the trend, but the blue lines, the green line is your entry at 1.0640. You can easily do a pending order on this one as well, mainly to, you know, take your mind and emotions away from it. So we've analyzed it already, we've understood the trend, we've understood various fundamental factors that are driving the GBP USD downward. We have got some confirmation of mother candles to the left that could actually give it more power, repeat the decisions by the bigger boys in the past, for example. So you could sell at 1.0640 and look into 1.0560. If you're looking at 1.0560, that would actually be a selling opportunity of about almost 80 pips. So let's say it's about 70 pips, but it's more than 70 pips. So if you're trading with $1 per pip, you are going to be making $70 US, if at all it hits the TP right there. It all depends on market conditions, of course. Now, Pico Luis, you've got a question. Is it okay? No problems. You've got a question earlier on. Sorry, I've not gone to it earlier, but you've asked about USD CHF. Of course, we can take a look at USD CHF right after our GBP USD. So hence the reason it's really important to pick the right pair for the day. There may be a reason why I wouldn't be looking at USD CHF, but as we are looking at it now, it's probably a bit of a risky pair, but we can actually take a look at it and to highlight to you about the risk. The reason is we have got loads of power of buying in the USD still maintained, and we've got a lot of interest buying the CHF as well. So both currencies are potentially on the upside, and if you pick one that is up and another one that is also up, you might have a bit of a struggle with looking at the trend clearly. Okay, so because it's head-on collision with the interest of buying and selling between the two currencies. Okay, all right. So let's complete the potential for GBP USD right here of a selling opportunity, selling at 1.0640. You could easily do a pending order, as I've mentioned. You click on the new order button. Make sure on the type right here you click on pending order. You've got market execution and you've got pending orders. Now, pending orders fits busy people or not busy people. It doesn't matter. It just takes away the stress of monitoring the your screen all the time. You don't need to do that. Once you have analyzed the market, researched and analyzed the market, understood which pair you want to trade, you pick the right pair according to the trend, you've done a trend analysis and a technical analysis, and then you can actually easily do a pending order. Now, once you do a pending order for one pair, you could also correlate that pair with other correlated pairs and trade the other pairs as well. The same way with pending orders. Now, I've been doing only pending orders, and it's just you know, a relief in terms of being stressful with the timing and not in time in catching the trend and various other things. And especially if you're busy and you are working, it's probably best to just place a pending order. Okay, so there you go, and you just click onto the type of order, either buy stop, buy limit, sell limit. We'll have a video to explain to you on all these different types of buy and sell stop. But what you can actually do is, because you're new to it, if you are new to it, you just click onto the stops first in order for it to go through, because it would probably be higher chances that it would go through if you click on either a buy or a sell stop first, and just to experiment on that. And if it doesn't let you, then you trade onto the other type of order, limit order instead. Okay, so I'll explain all that in the short videos as well, of the 4 types of buy and sell, limit and stop orders as well. Okay, all right, so there you go. So we've got it selling at 1.0640, and then you want to take profit at either 1.0560 or 1.0535. Okay, so it's anywhere between 70 to 80 plus pips that you have potential in this trade at GBP USD. Now, what I would like to do as well is to introduce you to an indicator called the average directional movement index. Now, I'll explain all that in the video as well. and I always add the level 25 on it. We don't change the parameters. Now what this indicator do is through this simple blue line, if it is above the level 25, which it is, then it indicates that it is strongly trending. Okay, Solomon, you've got a question. Are we expecting a retracement GBP USD to 1.0800 due to the sharp drop before the sell? I think we can keep it really simple. At this moment of time, we've done a trend analysis. The trend analysis tells us that there's a continuation of trend. It's still going strong at this moment of time. And if it is still going strong, we don't know how strong and how far, but we have some opportunity to sell. So if we've got an opportunity to sell, what it's telling us from the market at this moment is that we can sell at 1.0640 based on the principles of psychological numbers, and we can also take profit at 1.0560. Now, the thing about whether or not it goes to 1.08 or whether the trend at this moment of time, it's probably a good pair to select for today, to pick for today, as its trend is continuing. There's a lot of factors driving the pound lower and lower as we speak, mainly with all the relevant things that are going on, driving factors that are going on in the UK. We've got a new Prime Minister as well. He is just juggling, and it's been, I would guess, highly stressed as well, and he's taking all the burden of all the left up crisis by Boris at the very beginning, and now the country is sort of in a mess, and that negativity is reflected in its currency at this moment of time. So there is some selling opportunity, I think, and it's showing through the charts as well. So I think with the 1.0800 area, we could forget that for now and basically focus on whether or not we can ride along this selling opportunity for GBP USD at this moment of time. Now, when I use the ADX as well, it's indicating that the trend is there. The trend is strong. The downtrend is strong, mainly on the daily chart especially, and the higher time frame. So this is an opportunity for us to ride along a strongly bearish as well as a clearly bearish trending GBP USD at this moment of time. Okay, so I've given you the prices of entry right there, and two exit areas as well, either at 1.0560 or 1.0535. Okay, so you've got two TPs. You choose one first, do a pending order in there, and basically see what happens with it. But so far it looks like it's got a little bit more room, but I wouldn't say more than 100 pips or so, anywhere between 50, 70, 80 pips to the downside. It's quite possible. We can also take a look at whether or not we have got any reversal going on, and I'll explain this in the video as well, in using the stochastics as a divergence convergence tool. If there is a divergence, opposite messages between the stochastic and the chart, then we have got a divergence. That basically means a reversal is coming very, very soon. So from the price referral point of what we can see at this moment of time, let's say if it is based on the 4-hour chart or even the daily chart right here, but better still on the 4-hour chart, because we've got some referral points to the left. We see a reversal potentially only at the 1.0550s area. Hence the reason we want to take profit before it reaches the 50 psychological level. So hence the reason the safest price to take profit for a sell of the GBP USD is 1.0560, okay, because of that opening price right here of that bullish mother candle. We don't see any other threat before that based on these cluster of candles that we can actually see. If at all it falls a little more, it could reverse there at 1.0550 area, But if at all you've got continuous factor, very strong factors driving it to go down even more, then it would break out from the 1.0550 psychological number and come down to this area right here, which is both the opening price of the bullish mother candle, but the closing price of a bearish mother candle, all together here at 1.0392. So I would think that it's probably best to exit at 1.0410 instead, to looking at the 1.0400 psychological number as a psychological level that we need to avoid, so we take profit earlier. But that comes later on after it breaks 1.05. If it does break that, then it shows us that it's got a lot more downside, what do you call that, hints to the downside. Okay, very quickly before we end the session for today, we would be going to USD CHF, was it? Yeah, so we will look at USD CHF very quickly before we end our session today. So let's take a look at USD CHF from a trends perspective. We'll start off with the 1 hour chart and then we look at what's going on. Now, with the 1 hour chart, for example, very clear, beautiful 3 lines going to the upside, and basically we are seeing it bias to the upside. But according to patterns here, we've got a bit of a V shape, we've got a double top as well, so we want to be careful for it not to be a double top pattern, because this means that it could potentially fall as well. But at this moment of time, from the 1 hour chart, clearly uptrending, we've got a bit of a support right here. Current price is at 0.9935. So as it goes above, there is a challenge. Prices may be challenged by the psychological number of 0.9950. So I would like to highlight that as a potential reversal area of price at 0.9950. Okay, so we want to highlight that there. So that is a potential area of resistance and reversal as well at the 9950 area. Now, if you are already buying, it's probably better to exit a little bit earlier, like 10 pips before 9950. So if you are exiting at 9940, could possibly be a little bit safer in case it might want to reverse at the 9950 areas psychological level. So as we are still doing a trend analysis at this moment of time, we could see that on the 4 hour chart, it's similar sort of sentiment, similar trend. We've got 3 lines up as well. And as we go on to the daily chart, we could see that we may have a little bit more reversal areas based on mother candles right here. So I see that we've got an additional line and at the top as well at the closing price of that mother candle right there as a potential. Now, if we go into the daily chart, we've already seen that as we see current candles here, we've got 2 candles having the wicks already sort of reserved at that one area, telling you that it is struggling, it may struggle to go up more. The longer the wicks, the higher the chances of it not actually breaking out of that just yet. So at this moment of time, it looks like there may be a potential reversal going on. So I'll very quickly look into the stochastic oscillator, and I want to look at whether or not we have got divergence. Now, very quickly, we have got a divergence here on the daily chart, which tells us that prices may reverse at any moment of time to the downside. Okay, how I do that is here you've got a high and a higher high. So we draw a trend line like this down. This is a higher high, but then based on this one here, we have got a little bit opposite movement as well. It's not the same. That means it's not a higher high on the stochastics. It's sort of like flat or not really the same as what we see on the chart. So that means we need to look out for a potential reversal. If we go on to the 4 hour chart, let's take a look. We have got high here, and the high here is on the same level as you guys can see, right? And then when we go on to the stochastic, it's a higher low, slightly downward. So that is another opposite as well. So the reversal could actually occur anywhere from now to a little bit later, but on a short term. So this means that anywhere between 1 hour to 4 hours, we could actually experience a reversal for the GBP US, for the USD CHF, sorry, to the upside instead. So there may be a reversal at this moment of time before prices maybe go lower or higher. We don't know that yet, but at this moment of time, it's got a bit of a reversal. So it's an uptrend overall, very clear uptrend overall for USD CHF, but at this moment of time, there may be a reversal anywhere between 1 hour, 4 hours time. There's a minor reversal. So if you are already buying, probably best to take profit and look at your other trades. All right, guys, so that's basically all I have for you guys. Any questions just before we end the session for today? I hope you guys enjoyed the session, and it will be us analyzing the market together using the tools and all the elements that are available on the 10 Academies dashboard. Okay, any questions, guys? No questions, then I shall end the session for today, and we'll meet each other again on Friday, on Friday's market wrap-up. All good? No questions? Okay, brilliant. Thank you, everyone. Thank you for attending my webinar. We'll see